What up, Pod Squatters? I'm Anita Wong.
And I'm Tiffany Lee.
We're investors, real estate agents, and the co-hosts of SARE Ladies, the girl power arm of subtle Asian real estate.
Every episode will feature funny, casual conversations with dope AF participants killing it in the real estate game. But also mostly people like you and me, just trying to figure it out. Stay for the drama and lulls. We're not pulling any punches. Hey, Pod Squatters, we've got a special treat for you guys today. Joining us is Sam Fong, the founder of Asian Investors Network, aka AIN, and a regular fixture within the SARE community. If you're local to the Bay Area, you might know Sam's face because he's hosted a number of SARE Bay Area meetups. Today, we'll get to know Sam a bit, pick his brain, and then we'll wrap up with a special segment where we ask him questions sourced directly from you, our listeners. Some more background on AIN. Asian Investors Network is a community of investors focused on stocks, crypto, startups, and real estate. Sam currently works at a private equity firm which manages over $1 billion of investor equity in commercial real estate. Sam has personally invested for 17 years in equities, residential and commercial real estate, venture capital, and private equity. He also acquires and renovates properties located in the San Francisco Bay Area and invests in commercial properties outside of California.
And fun fact, Sam and I have actually known each other for quite some time. We actually went to middle school together, right, Sam? We met in math class, which Tiffany says is the most Asian way to meet someone.
We took keyboarding too.
Keyboarding and math.
Yeah, we learned how to type, I guess. That's how we met. And then I think we went to at least one homecoming dance together. I actually don't know what dance. I can't remember that this month, but anyways, we go way back.
Just to clarify, were you guys dates at the homecoming dance? Were you guys each other's dates?
Yeah. Yes, I think so.
Aw, that's so cute. How old were you? Like 13, 14?
I think we were 7th grade, 6th or 7th grade, something like that.
Yeah, it's in 8th grade, I think.
Do you guys have a picture?
Yeah.
We should add that to the pie. If you guys have
and
that, image, like both of you with braces.
I don't know if we have a picture.
I hope not. I've definitely all burned all of my pictures.
I'd be interested to see.
Yeah, I remember when we used to receive those little photos, like, people used to take studio photos. Yeah,
yeah, the tiny studio.
Did you guys have those?
Did
you
so
do
cool.
that?
I don't know. Together, but we definitely collect. I definitely had a stack of them.
Where everyone's face is all pale, right? They like just white out everyone, so everyone looks like a doll. I remember those photos. I was, ew, you guys did that? I was like poo-pooing on that when I was in high school. I was like, oh, you dorks.
That's the thing to do back then. Everyone did it.
Maybe I was just a hater because no one would do them with me. I'm just a hater, guys.
We can do them nowadays. Photo
That'd be really
all right. That's very, very cute, guys.
So we're gonna start to get to know Sam, and so let's just get started. Sam, how did you get into real estate?
So I actually started all the way back in 2008, and at the time I'd already been building my network and investing in stocks and private lending for several years. So someone I trusted in my network came to me with a syndication opportunity in Dallas, Texas, and I thought the deal looked good, so I invested in it. But unfortunately, as you know, the financial crisis really hit in August of 2008, and the financing for the deal fell through. So what happened was that investors simply got their money back, less some negligible accounting fees. So that was my first real taste of real estate and syndications. Even though it didn't work out, I didn't really lose any money.
Wow. Okay. So what do you do now? What would your parents describe what you do now?
I think what they would describe it as is risky. I think they don't really understand the business so much, but I think that over time they've come to accept it, that I'm not going to be a doctor anymore. So I think they are generally a bit more supportive these days, and they understand like I fix and flip houses and make a profit off of that, and I have something to do with investing and business.
Yeah. So your parents were in the real estate space, and so were they like supportive of your business? Like how they wanted you to be a doctor, obviously first, and then so they were not really supportive of your business ventures and things like that.
Yeah. So for a bit of context, most of my family are doctors and nurses. So I was the black sheep because I never wanted to go into the medical field. They kept trying to convince me all the way into like my mid-20s, I'd say. So my parents are pretty conservative about investing. Like they don't even really invest at all. They just believe in saving, and they've done a great job of it over the years. They believe investing and business is inherently risky, and they try to persuade me for most of my life to choose a safer, more stable path. As the classic Asian way. Son, you can be anything you want, doctor or engineer. So it was pretty tough going against the grain, especially during all the years when I had really nothing to show for it. But I knew that even though their advice was well-meaning, it wasn't for me, and it wasn't going to help me achieve the goals that I wanted. So I was very determined to carve my own path, and I worked really hard over the years to produce results. I knew that once I started showing results, then people would, come to accept it more. So once I started showing, finances and results and sharing what I was doing with my parents, they became more understanding over time. Today they're pretty supportive, and they just caution me about the risks, and that's it.
Oh, that's great.
That's great.
So yeah, I mean, I wish. Well, actually, yeah, my parents are pretty conservative too. I would say. I mean, I would say like they're, you know, I think that they are in that mentality of maybe that immigrant mentality of like saving, like be small, be quiet, and try not and do the things that are safe and that everyone knows is tried and true is like
Yeah.
will be a successful path in life, right? Go to a good college, then learn, go to a good college, be a doctor or engineer or those like three things, and then eventually like when you decide not to go that route or do something riskier, you kind of it's definitely a struggle with them all the time. At least it's certainly my experience.
Yeah, definitely. Sorry, go ahead.
No, go
I was
ahead.
going to say that I feel like it's a constant struggle that you have to prove that what you're doing is right, and they always believe that they know what's best for you and what's right. So you have to prove it until there's no more doubt.
So what was your mindset like when you were going through it and you weren't seeing the results? Was there ever a point where even you doubted what you were doing, and how did you push through that?
Yeah, I would say it was really tough, because for so many years it was like a struggle. I made these lists of goals when I was 18 because in high school I struggled a lot. I went to Mission San Jose, very tough, competitive high school. I think it's like top number 39 in the country or something. But I was a terrible student. So all of my peers were doing great. I was not, and yet here I was insisting that I knew better. So, it was a pretty frustrating experience, but I was really hardcore. Like I was very determined. I told myself, I'd rather die than not be successful. And I meant it. I was really pushing.
That's hardcore, dude.
Yeah, I'm an all-in type of person. Like I like to go really hard at whatever it is I do, like whether it's something fun or business or whatever. So, I think that kind of mentality helped me persevere against everything. I told myself like, today you kind of suck, but in the future you're gonna be great.
Aw, I like that. So guys listening, if you suck right now, just know there's light at the end of the tunnel. Sam said so.
Yeah, there's light at the end. I was always living in
Yeah.
the future. Like I knew that I had to achieve my goals, and I was willing to do whatever it took to get there.
I
That's
love that. I
awesome.
admire that. I don't know that I was that realized as a teenager. Just be like, just believe in yourself. You have to believe it,
Yeah.
and then you will become it. So So what do you think, in order to be most successful, do you think that's really one of the most important personality traits in order to be successful as an investor, as you know, in the private equity space? Like, what do you think are the most important personality traits and strengths someone needs in order to be successful?
Yeah, I think probably the number one thing is the will to do something, because with that you can get access to everything else, right? Like today you might not understand anything about investing, personal finance. Maybe you're in like a world of debt. Maybe, you know, you have never been surrounded by good money concepts or anything. But as long as you have the will to keep improving yourself and making those incremental gains, then you're going to get there. It's just a matter of time. So I think that's number one. You know, it's the classic think and grow rich line. The starting point of all achievement is desire. So as if you have enough willpower, if you have enough desire, you're gonna learn what you need to know. You're gonna do what you need to do in order to get there. And I think the other thing is probably emotional strength, because you need discipline to stick to your investing thesis, to persevere against you know, the two deadly pitfalls in investing, which is fear and greed. You know, everyone gets messed up because especially when they're first starting out, because of these two things, fear and greed. So a lot of people try to go the easy route, the get rich quick route, and they fall for all sorts of crazy stuff. I know a guy who just went all in on this crypto. He had a down payment saved for a house in the Bay Area, which is pretty significant, right? But he went all in on this crypto, turned out to not do well, and lost it all. It's pretty nuts. And that's all he had. So that's a pretty tough lesson to learn. And the other thing is fear. You know, like fear is another really tough emotion to overcome, because there's always analysis paralysis. There's always all these market experts or people around you, like your family and friends, telling you, like, why are you doing this? Or you don't know what you're doing at all. Like, why are you getting involved in this investment or something like that? So especially if the people around you are, you know, more successful than you are currently, and they're well-meaning, that kind of stuff is actually a huge detriment to moving forward, because you're going to think like, you know, they have my best interest in mind, they know what they're talking about, and they're telling me not to do it. So, you know, if you listen to that, then you're buying into that and you won't be able to move forward. So I think it takes a lot of strength of character in order to succeed in investing. Sometimes you have to go against the grain.
Do you think you were inherently like that? Sorry, what were you gonna say, Anita?
No, I want to hear that.
Do you think you were inherently like you grew up that way, or do you think this was something that you had to build over time?
I think I had to build it over time. Like in high school and before, I was like very unsure of myself. I didn't know anything about investing. You know, no one taught me anything about it. All I knew was I should be saving money. But you know, I read the good old Rich Dad Poor Dad. I knew that I had to do something with investing, and it was really something that struck like a chord with me. It became my passion, investing.
Mm-hmm.
So I think that because I had this grand goal of becoming a successful investor, despite you know, everyone else in my family being like a doctor, I knew that I had to work really hard to make it happen. And because I was starting out with, I felt like it was essentially nothing, I had to build myself up and create the character that I wanted to be.
So I think it reminds me too of you know, an Atomic Habits in James Clear's book, which you probably have read. You know, he talks about like how athletes, you know, they really become good at what they do because of those, you know, moments that you're bored, like there's nothing going on, you're not seeing any progress. So how do you, like, you know, I know you talked about willpower, but how do you have the willpower kind of during those times, like get yourself out of those ruts and just like tell yourself to keep going and things like that?
Yeah, that's a great book. I like Atomic Habits. I think that what is really helpful is keeping your goals in mind. I think that I was able to push as hard as I did, especially early on, because I had this huge overarching goal that, felt out of reach or impossible. It felt like a huge, scary goal. I had no one around me who could teach me the way. So, that was a scary and challenging goal that helped me to progress. I was like, okay, what can I do right now that would take me further and closer to this goal? What are the most urgent actions that would achieve the highest results and value for my time? I kind of crystallized that thinking over time, but I had an elementary understanding of like, hey, I need to be doing something that like moves the needle, like that moves me forward. Even when I was like as young as, let's say, 18, I was like, what's the next action I need to take? And I think part of it was fueled by like this theme of sacrifice in my personal life. So a bit of context: when I was choosing colleges, I had a choice between UC Davis and UC Merced. So all of my friends and my girlfriend at the time were going to UC Davis. That's like literally my entire like life circle. And also, it's like the more prestigious school. UC Merced was in its opening year when I attended. It was like literally 3 buildings built on the ground, and it was a risky choice. But I knew that if I went to UC Davis, then I would continue on the path I had before, which is, kind of struggling, kind of just partying and having fun. Whereas if I went to Merced, I would be forced to make something of myself because I don't know a single person out there, and the school is literally just built. I'm the first class, so anything I want, I have to create it for myself. So I told myself, look, if you sacrifice the next 4 years of your life, then you can have a great future. And it was the toughest choice I had to make at the time. But, choosing to go to UC Merced meant, I thought, sacrificing all my friends and everyone I knew and cared about, but I would have a great future and I would get closer to my goals. So making a crazy decision like that helped me have the willpower to do whatever I needed to do, because you already sacrificed everything. And also like no one knows you. You can be whoever you want to be, right? So I really made the most of it, and I spent, the next years just really pushing.
That's so interesting. Do you feel like your circle of friends have changed since you made that decision? Like, do you still talk to those old friends that you were like partying with, or do you feel more closely aligned with people who share these values that you had when that switch went off, where you're like, I'm not going to go the same path as, where my friends, where I'm comfortable. I'm going to take this uncomfortable route. So I'm just curious, did your circle change along with that?
Yeah, I actually was really conscious about it because I read so many books. And one theme that was kind of hammered into me is that it's very important to choose who you surround yourself with. I was learning this at the age of 18, and I really stuck to it because, like I was a pretty hesitant, like not confident person before. So it took some time to like break out of my shell and so on. And also like a lot of people I thought were my friends weren't really my friends back in the days. So I was like, you have this opportunity to make a fresh start, and you can consciously choose who you surround yourself with. So beginning around that time, I started to be really conscious about who I choose to be part of my life. Like I want to make good friends who will support you in times of good and bad, and so people who are generally badass, right? Like if you surround yourself with badasses, you'll have no choice but to become more badass yourself. And same thing, like if you are surrounded by successful people, like you'll gradually adopt their psychology, their thinking, their ways of doing things, and you consider things that you would never consider before. I think a great way of looking at this would be like the anchoring concept, which is basically someone announces a certain idea or concept or price, and then you start to anchor your expectations based off of that anchoring concept. So let's just say you're haggling for something, right? And then someone throws out like a number of $100, and in your mind you're thinking, you would only pay like $50 for it. But now that they threw out this $100, like you got anchored to like a higher term. I think it's the same thing with goals and things like that. Like someone announces like, oh, my intention is to, earn a net worth of 10 million bucks. If someone said that to you and you had no conception in the past of ever even making it past $1 million, you might think, oh, are my goals too small? Especially if that person is close to achieving it. You might start to consider things in a different way than you did before. And over time, I think that psychology really affects and helps you. Yeah, so to answer your question, yes, my circle of friends definitely changed. However, it kind of came full circle, and my friends at Davis remained friends to this day. And yeah.
Aw. So there was this downtime where you kind of like had to detach yourself from what you were used to. Like you distanced yourself from your old friends and your old identity to forge this new path for yourself. And once you were more like self-realized and self-actualized, you're like, oh, actually now I can revisit that circle because I'm a more, full version of myself. Whereas before, you kind of have this collectivist attitude, which I think is like kind of an Asian thing too, right? Like the collectivism, the group collectivism. So when you like when you want to do your own thing, that's kind of you being more Americanized about it. I feel like that's a more, selfish individual thing where like your Asian surroundings and the Asian people that you grow up with is like, dude, why aren't you conforming? Why aren't you being a doctor? Right. Like, so
Right.
that's really interesting that you kind of did that for yourself. And then when you were comfortable with it, you were like, okay, now I can come back to where everyone had my best interests at heart, but you guys were kind of like cuffing me a little bit, like holding me back.
Yeah, I think that's a great way of putting it. I definitely realized that I needed to work on myself first before I, could follow anything else, because if I didn't have what I wanted down, then I would never achieve what I wanted.
That's super inspirational. And that takes us to the SARE questions portion of the podcast because, people know of you in SARE. And so you're kind of like, a reputable source to kind of like gather information from. So one of the questions that we had come in was if you had $10,000 or $100,000 and $1 million, so 10K, 100K, and $1 million to spend, what would you do with each amount today?
I think the number one thing that you can do with $10,000 is to buy up $10,000 worth of the Series I savings bond from the U.S. Treasury. So that currently is a pretty much guaranteed 9.62% annual return with minimal downsides. It's literally backed by the U.S. government. The one downside, which I consider pretty negligible, is you don't earn interest in the last 3 months if you cash the bond within 5 years. Interest rate is adjusted for inflation every 6 months, so you benefit during the period of high inflation. Is exempt from state taxes, but subject to federal income tax, and you get paid out when you cash the bond. So guaranteed 9.62%, that is solid. If you had 100 grand, I would invest it in. I guess it depends whether you're non-accredited or accredited, but you can probably get access either way. I would invest it in syndications. I think that syndications are a fantastic way to, build some experience in real estate or get some exposure to real estate while investing in pretty solid deals. Like you can commonly achieve over 10%, and you have your money put away for, let's say, like 3 to 5 years or so. So if you invest with a good operator, a good sponsor, then that is definitely something that is accessible and a good use of money, in my opinion. And for $1 million, I think that you have a lot more options here. By definition, you are already an accredited investor. So that means that anyone can offer you investment opportunities. And sometimes these deals are very interesting. So for me personally, I'm kind of agnostic when it comes to investing. I just want the highest return for the lowest risk. So whatever asset class it is, as long as I understand it, the risk involved and how I can mitigate it, and the likelihood of achieving the projected returns. I think that if I can analyze all of that, then I can deploy the capital in whatever makes the most sense. So for example, I think in this environment, I would deploy it really opportunistically. I think that there are going to be some really great opportunities in the coming months or year where, there you have sellers or providers in some sort of distress situation. And I think that is always the best time to buy. Like when you have like a great advantage having capital, that's the best thing you can do with your money.
That's awesome. And that actually segues really well into another question someone asked. And apologies if I'm jumping back and forth from our outline, but someone had asked, how are you changing your strategy to adjust for the recent market volatility?
Yeah, that's a good question, and the crystal ball answer, right? I think that fortunately, I've had the opportunity to access a lot of great information and ideas in my roles at Asian Investors Network and private equity. And towards the end of 2021, I thought that valuations in the stocks and crypto markets were getting silly and overvalued. So I exited some positions that I thought were getting too frothy. And then the Federal Reserve started hinting about interest rate hikes. So I was like, oh, gotta get ready. And after that, the war happened in, I believe, February. So I prepared even more dry powder. So um, I've been I've been opportunistically investing this year in 2022, basically when I see great deals, and it's in commercial real estate, private lending, and stocks. I think that some tech stocks have been hammered to a point where you're starting to get nice deals. Uh, Earlier this year, I was able to get in on some commercial real estate deals, and then there's some pretty cool opportunistic private lending opportunities that I got access to as well. So I think that this is the time to hunt for great deals, and I've reserved a decent amount of dry powder because I think those deals are coming.
Amazing. And that actually, I feel like you knocked out the other question that someone had asked. So it was, what asset type and which city would you buy in 2022 given the current debt conditions?
I think, yeah, that's a kind of segues into that real
Yeah.
nice. I think there's currently a discrepancy in expectations in the market. A good way to describe this might be that sellers' expectations are kind of based on last year's valuations when everything was still good, and then buyers' expectations are based on next year's valuations when you got the war, high inflation, crazy, or not crazy, but higher interest rates, and generally more distress. So buyers are looking for great deals, and sellers are like, let's keep it at original pricing. So I'm looking for better deals. I don't think there's been enough distress in the market to push pricing down to, crazy deal levels. I like the no-brainers, like the ones that are for sure going to make you a lot of money. So I think with regards to asset types, I like industrial and multifamily. So multifamily has historically performed well during times of distress because people always need a place to live, and rents actually stay the same or even improve because people can't afford the houses. And industrial, still going strong. I think there's a ton of unmet demand still, and everything from like last mile distribution centers, self-storage, film studios, everything. And in terms of cities, I think all over the country, wherever it makes sense, just wherever it's real estate friendly and not, all the laws are stacked against you. So I like, North Carolina, Texas, um, Indiana, some of the other states.
Awesome. That's a very thorough analysis that you just gave us on the fly. Very impressive. Very impressive. So
Thank
that takes us to our last question, right? I know we I know we have a lot of SARE members listening that might be thinking of repivoting their career choice, similar to how you kind of just, went off the beaten path, right? So if they were thinking about becoming an analyst, right? It's like, so let's use for an example in your private equity fund, what qualities do you look for when hiring a new analyst in the commercial real estate space?
Yeah. So the private equity space is a pretty linear path. It's pretty tough to get to, but it's generally considered like a pretty solid career choice. The way to get there is to, do the traditional thing, go to a good school, get good grades, get into a prestigious summer program um, at an iBanking firm, investment banking firm. And then after that, get hired as an investment banker, work there for 3 years. These are pretty tough years, by the way. Like people commonly work like 60, 80, 100 hours is not unheard of. So a lot of people wash out during the first 3 years. If you make it past the first 3 years, then you can, and you're good, then you can get to like a senior analyst level. And after that, you can look at transitioning into private equity. The qualities that people look for are, solid foundation in finance and a really good attention to detail. Like you cannot make mistakes. And if you do, you got to make sure you don't repeat those mistakes. My team is very small, but we handle a lot of money. So we have to make sure that, we're always doing the best for our clients and that we never make a mistake to the best of our ability. And also everything should be, it's very systematic. Like you check everything down to the last detail. You go through your checklist to make sure that you've done all of your due diligence and so on. So I think that the traits that we look for are detail-oriented, reliable, obviously trustworthy, can handle client information and tons of money, and yeah, strong finance foundation.
That's a great answer. Thank you, Sam. So, for everyone listening at home that was inspired by Sam's talk today, if you'd like to interact with Sam, pick his brain some more, you can find him on his Facebook group and YouTube channels, Asian Investors Network, and his website, analectventures.com. That's ANALECT Ventures, like it's spelled.com. Thanks for taking the time to speak with us today, Sam. We really appreciated it.
Thank you, Tiffany and Anita. Really appreciate you guys having me on your podcast. It's an honor.
Hey, Pod Squatters. We hope you enjoyed today's episode of SARE Ladies, thanks to the support from our following sponsor. Dr. Hua Win and her husband, Dr. Jaime Gonzalez, both optometrists by trade and owners of multiple multi-million-dollar optometry practices in the Dallas area, founded Black Steel Investment Group with a passion to invest to impact. With the foundation forged on 3 pillars, integrity, community, and legacy, they put their investors at the forefront of everything they do. The couple are both seasoned, full-time multifamily investors, syndicators, and asset managers who, together with their investors, have invested in over 6,900 units as general and/or limited partners in Texas, Arizona, Florida, and the Carolinas, with total assets valued at over $480 million. Juan and Jaime are always working to find new investment opportunities for their investors. The couple enjoys traveling the world for delicious food and interesting cultures with their 8-year-old daughter Athena and have a puppy named Coco Ali. Thanks for hanging with the SARE Ladies. Until next time.